Good morning, everyone. Good morning. It is July 7th, 2025. It is Monday. Thank you all so very much for joining our Monday morning touch point. And what a devastating weekend it was for our area, especially when we've got so many people that know people in that entire Kerr County area. What a terrible, terrible weekend. So it's, my goodness, I cannot even imagine what those families are going through. And we've got team price agents that know them personally. So it is just downright a horrible situation for everyone there. And certainly our, prayers are with the families and all that. Just absolutely incredible just to see just how bad this flood in Central Texas can be. I mean, this is called Flood Alley for a reason, and this area is one of the worst areas in the entire country for flash floods, and we can certainly see over the weekend what happened. So clearly our thoughts and prayers for everyone involved in that horrible situation. So really horrible situation. And of course, it is affecting not only us individually, personally, but it's also affecting the market, and it will continue to affect the market. We're going to look at some historical data on when we had some previous floods and what happened with the market in previous floods, something to be aware of. It's also a good opportunity to review the casualty loss section of the contract. We're going to do that on Wednesday whenever there's a major weather event, whether it's a hailstorm or a flood or whatever situation may happen. Properties that are currently under contract, that is where the casualty loss section of the contract comes into play. So on your own, take a moment and review that section of the contract. We are going to be reading every single word, every single sentence on Wednesday during our contract proficiency, and really discuss what that means. What are the rights for the buyer, the seller, responsibility for the seller? So a lot going on in the market, of course. We're going to go ahead and get started with our new listing to pending ratio, do a complete market overview, see where do we think the market is heading? What is going on with buyer sentiment, with sellers? How do sellers position themselves to sell in what is a very challenging market for sellers in most areas, most zip codes within the city? We are noticing a decrease in the number of showings. We do have a very early selling cycle within the Austin market. And from the middle of July onwards, the market does tend to pull back. Demand pulls back. And the good news is that active listings also tends to pull back a little bit. And we're certainly seeing that. Last year, the number of active listings peaked July 15th. We could very well have peaked on Friday on the number of active listings. We will know by this next Friday whether or not we have a little bit of a jump on the number of active listings. As you know, we track this information daily, and you can access all of this on Insight and Statistics. So take a look at the Insight and Statistics. But let's go ahead and get started with the new listing to pending ratio, the single best leading market indicator available for the entire area. And the simplest way to describe this ratio is for every 2 listings, or let's just even say for every 100 listings that come on the market, what is the ratio of properties that are being absorbed by the market? If you have a 0.5 ratio, then for every 2 listings coming on the market, 1 is being absorbed by the market. If you've got a 0.6 ratio, for every 10, 6 are being absorbed by the market. That 0.85 ratio is going to give you that balanced market, good, nice, steady demand in relation to the availability of inventory. You start getting down to the 0.65 to 0.75, that is when we notice a tangible increase in inventory. If you get down, or when you get down to the 0.5 to the 0.65, I like to use the word substantial increase in inventory in relation to the demand. The reason why I like this ratio is we can get lost with some of the data. For example, we can say, let me take a look at the new listings. We can say, let's just pick this. We can say, wow, in the past 3 months, new listings are down 300 a week. True, very true. It is down 300 a week. But in relation to the properties that are going pending, we have a softer market from a 0.67 to a 0.61. That is why I like to look at the ratio. We always want to compare what is coming in the market in relation to what is being absorbed by the market. Let's go ahead and go backwards in time a little bit. I want to remind you that this ratio is for the 6-county area: Travis, Williamson, Bastrop, Hayes, Caldwell, and Burnett counties. We're going to go from the 23rd to the 30th. Let's go ahead 23rd to the 30th. Take a look at pending, see if we have to update anything. This goes from 408 to 409. Not that much of a change. 16th to the 23rd. This stays the same. Let me go 9th through the 16th. This goes up to 488. Let's go from the 2nd to the 9th, and that's going to be 499. Let's just take a look at a few more and make sure that we have all the latest and greatest. And that's going to be 561, 532. Perfect. So we are all up to date. Now we're going to take a look at the 30th to the 7th. We're going to start with the number of new listings. And even before I click on that, I can expect the number of new listings to plummet. Well, why is that? Well, the weather's just been horrible within our area. A lot, even team price agents that had listings that were supposed to come on the market on Thursday, on Friday, they've decided just to hold back. So I can expect this number to go down significantly. Let us see what happens with the ratio, because when we look back on some previous weather-related events, we saw the ratio go up because you had properties that went pending between that Monday through the following Monday, a lack of new listings entering the market. As a matter of fact, let me go ahead and just show you that really quick so that you can see. I'm going to go to Insight and Statistics. I'm going to scroll down to New Listing to Pending Ratio. And let's take a look at the monthly ratio. And you can see down here, let's take a look at this ratio, the entire 25-year. There we go, 2007, May and June 2007. And if you Google just May, June 2007 flood, there we go. There is the June 2007 Texas flooding. We had major flooding happen within the entire Austin area, and that caused the number of new listings to plummet. And therefore, look at this. This is really even close to downtown Austin, and major flooding happened within that time frame. And you can see that the ratio for a 2-month period went high because we had a lot of listings not come on the market. Now, the flooding wasn't as concentrated within the Austin area. I do know that some areas did experience just a little bit of flooding, nothing like the May, June. This time around, it was more concentrated, of course, throughout the entire Hill Country area. And the Austin area MLS doesn't carry a lot of inventory for the Hill Country area. So I don't expect the ratio to jump like it did back in 2007. But let's go ahead and keep on updating the information to see what is happening with new listings. 861. Well, we knew that was going to happen. The weather has been so terrible. You can even see open house. 2,089 open houses were held within a 7-day period. Very few open houses over the past weekend. Not only did we have July 4th on Friday, a lot of people don't want to put their houses on the market. And then, of course, we had the weather situation. Let's take a look at price increase. We're at 275 properties went up in price. I would say 90% of these are going to be builders, new construction, prepping for July 4th. I saw some of those advertisements. Hey, prices are going up July 4th. Just get a deal before prices go up. Or we just had prices go up except for this property. It's a strategy that builders will put in place right before a holiday. Just try to spur some consumer sentiment of like, oh, wow, maybe we reach bottom. We all know what's going to happen. They're going to bring those prices back down. The market simply does not warrant price increases, especially in new construction. But builders have been doing this as long as I've been in the business. It's very much a 1980s sales mindset. I don't agree with it for the life of me. I don't know why they do that, but they continue to do that. We're also at 1,648 price drops. That ratio drops down to 86%. That's going to be the lowest one we've seen in quite a while, simply because we had a lot of price increases from builders and activity, of course, this week, very much on the low side. Back on the market, 223 back on the market. That's going to be a very high number. I would say that's also weather related, a higher back on the market. Very common whenever we see weather events like this. Properties will get damaged. Buyers will just get a little bit on the antsy side of things, saying, you know what, let me just pause this. I don't feel like moving forward. We do see an increase in back on the market whenever we have a catastrophic weather-related event within our area. Active under contract, we're at 369. Not a terrible number, especially given the fact that, the weather's been bad. We've got July 4th on Friday. Not a bad number. Let's take a look at pending. You know the drill. We want to get 5 guesses on the pending. Let's go ahead and just get 5 guesses going on the pending. Keep in mind that it was a holiday weekend. So let's get some guesses going. We've got Harold starting us off at 180 pending. Go ahead. We've got 1 down. Let's go ahead and get 4 more guesses going. Thank you, Harold, for starting us off at 180. Let's get 4 more guesses going. We've got Violet coming in at 212, Kristen at 125, Seth at 199. We've got 155, 150. Well, I am happy to report to you that this is more bullish than I would have personally expected. We're coming in at 241. 241. Not bad. It still puts us at a ratio of 0.56. Not a terrible ratio to start out. We've gotten used to starting off the week at the 0.48, 0.49 into the 0.5. The fact that we're starting off the week at a 0.56 means that we're going to end closer to the right around the 0.67, 0.68. Keep in mind that the only reason why this is happening is because of the drop in new listings. So think about every seller that was saying, I was hoping to put my home on the market over the weekend, right after July 4th, but let's go ahead and just wait. We do expect to see a little bit of a bump on the number of new listings that come on the market in the following weeks. Let's take a look at last year, because you can see that the July 4th week, we had a drop down to 982, and then look what happened the next week. Went back up to 1159, 1028, and then as we enter the normal seasonality of real estate going into August, the number of new listings really starts backtracking quite a bit. The ratio improves. It peaks towards December, and then we enter the new year. Well, that's where we are, starting off at 0.56. Let's go ahead and take a look at the comparison really quick. So we are down 121 listings, 121 new listings. We're down 12.3%. We're not going to make up that gap between now and 11:59 p.m. tonight. That is going to be a negative figure. I'd say it's going to be not even as much as the negative 42. I expect something closer to the negative 60 or so, mainly because of the weather. 99 more price increases, 15 more price decreases, 11 more price drops. But the big one right here, take a look. We have been double-digit drop on the total pending year over year going on 3 weeks. We're going to enter this 4th week. We are down 33% drop year over year on the number of pending properties. That's going to be active under contract plus pending. That's going to be a double digit. Last year, we were at a 0.76 for this week. We're starting off at a 0.56. We're going to settle somewhere around the 0.66, 0.67. Still within that substantial tangible increase in inventory. We are simply not noticing the jump in demand towards Austin real estate. It's just not happening. Price your homes accordingly. Have this conversation with your sellers. Rely on this resource. buyers have all the leverage right now and the vast majority of inventory around the area. Let's go ahead and update the monthly. First thing we're going to do is update the previous month of June on the pending side of things. That's going to go from 1659 to 1661. And then we're going to take a look at May. Let's take a look at what's going on in May. 2061, that doesn't change. We're really early into the month, but let's take a look at what's going on so far this month. The reason why I overlap the weekends and then I just do month over month, I like to overlap the weekends just to get the entire weekend activity that happens. It gives us more of that instant snapshot of what is happening each and every week. That's why we overlap Monday through Monday, Monday through Monday. And then I just take a look at the month to date. And I would say that the week over week provides that instant, what is going on this week, what's happening right now with the market. The month over month does give us that really good pulse of now overall what's going on. Overall, is inventory increasing, decreasing? So let's take a look at the number of new listings. We're at 760. Let's take a look at price increase. We're at 251. We're going to look at price decrease, 1337, 84%. Lowest one going all the way back to January 2025 at 82%. Let's take a look at back on the market, 174. Active under contract, 291. Wow. Oh, wait. No, back on the market, active under contract, 291. Okay. And let's take a look at pending. Oh. So there's the month to date. 0.49 month to date. It's only 7 days into the month. I do expect this number to go up. I do not expect this number to beat that 0.67, but it is only 7 days into the month right now. But we are starting off the month at a 0.49 ratio. When we remove the activity that happened towards the end of last month and we only focus on July, we're looking at a 0.49 ratio. Let's take a look at closed. We're at 281. Withdrawn, 247, and expired. A lot of withdrawns really early into the month, and we're noticing a lot of withdrawns already. 74. Of course, last month you can see that we had 1,024 withdrawn properties, and that's going to be, wow, that's going to be a very, very high number. I would even say for the month of July or June compared to any year, that's going to be the highest one by far. I mean, we have to go all the way back to, we're here, that's 1,062. That's 8. So 1,062. And what was the number this year? 1,024. So we have to go all the way back to 2010. We have to go all the way back to June of 2010 to get a higher number of withdrawn properties. And statistically, 30% of those withdrawn properties will be relisted over the next 3 to 4 months or so. We've got a number of properties that are being converted over to rental. That is why the rental inventory has reached a record high and it keeps on going up. We've got a record high number of rental properties currently in the market. A good bit of that is, and we notice that, what I usually do about once every quarter or so, I'll just get 1,000 properties that were withdrawn. I just take the PID, the property ID, and then I search that PID and I say, okay, how many of those were converted to rentals? And we are noticing 20% or so of those will get converted into rentals, 30% will get relisted, and then the rest, just nothing really happens to the rest. Let me go ahead and just save this really quick, and then I'll use a separate computer to actually print this as a PDF. So just give me 1 second so that I can print this as a PDF, and we can then take a look at some graphs to see exactly what is going on, cumulative, year to date. So give me 1 second so I can update this information. It'll just take a few seconds for me to get all this information and update it. We can actually start taking a look at some other graphs just to make sure that we understand exactly what is happening with the market. Let me go ahead and update this. Give me 1 second right here. I have to close it on one computer, open it up on a different computer, export it as a PDF, upload it, and then we've got access to the latest and greatest information so that you can hopefully review it with your client and your client can make educated decisions on what to do with pricing and what to do with their property. Because that is the conversation that we are having across the board with a lot of our clients. Like, how do we price our homes in a competitive manner? And really, what is the goal of the seller? Is it patience? Is it price? What is going on with that specific family's needs related to their property? Let me go ahead and just go to Insight and Statistics. We're going to go to New Listing to Pending Ratio, and we can see that this information is now updated. This is now the latest and greatest that we just updated. Let's take a look at some graphs. I want to open this up as a PDF so that we can see the entire thing. Let's focus on the monthly. There's that 0.49. Last month, we were at a 0.67. The June of 2024, it was 0.71. July of 2024, we're at 0.77. Once again, really early into the month, it is a 0.49. I do expect that to go up. The chart that I really like to focus on is going to be this one right here. It's going to be the cumulative number of listings. Let's take a look at new listings. There we go. Cumulative number of new listings, everything that's ever come on the market from January through July. Keep in mind that we're only on July 7th and we don't have that many listings to make up to reach a record high. Last year, all of January through all of July, 31,557. So far this year, 30,285. Not that much. I mean, what is that? That is how many? 1,500? We only have 1,500 listings to go to eclipse last year's record high cumulative listings. We are going to beat that record. That is a fact. We're going to beat that record. When you take a look at the pending side of things on the cumulative side, well, we're at 23,397 pendings. This is from January all the way through July. Last year, we had just a slight drop from the year before. 2024, 27,947, only 0.48 drop compared to 2023. But right now, we're down 16%. This number is going to go up. It's going to settle somewhere around the 25 to 26,000. Better than 2012. I would say it's going to be very close to 2007. But when we adjust it for population, because we have to compare apples to apples, you can see where we are. The data simply does not lie. We are not keeping up with pendings. When we adjust it for population, we are down 32.1% below average. And so far this year, we are down 18.2%. When you take everything that's new on the market minus everything that's gone under contract and you add all of those together, you're going to get a plus or a minus. A minus is going to indicate that we have way more properties going under contract in relation to properties coming on the market. A plus is going to say the complete opposite. We are in a plus right now. The yellow is going to be the pending. The bluish teal is going to be new. And then the bar graph on the bottom is going to be the difference. And we can see that the difference year to date on new listings minus pending is going to be 6,888 on the plus side. That's going to be the highest number going all the way back to 2010. As we go through the month of July, it's going to just blow that number out. I would say we're going to get very close to 2004. We're not going to get anywhere close to 2003 at 13. That's a ways to go. We're not going to beat that. We're not going to beat that next year. Let's take a look at a few more things. Active minus pending listings. We can see that when you subtract everything that's active minus everything that's pending, we're on the plus side, 15,260. And what a departure from March of 2021, where it was negative 3,564. We had way more pending than we had active. And of course, right now, we just reached a 20-year record high on the difference. So the pending for the entire year, if you take a look at absolutely everything, every property that went under contract, every property that came on the market, every back on the market, so far this year, and this is a really good benchmark because we are right there in the middle of the year and we're at a 0.67 ratio. So that puts us right at that tangible, substantial increase in inventory the entire year. Last year, 0.80, which was a little bit less than 2023 at 0.83. It matched 2022 at 0.83. And of course, that right there was the worst number going all the way back to 2011. Right now with a 0.67, we have to go all the way back to 2010 at a 0.63 ratio. Let's take a look at inventory. As of this morning, we are sitting at 17,747 active listings on the market. That's going to be a drop of 4 from Friday. 399 drop week over week, a 206 increase month over month, 1.17% increase. That's going to be the lowest increase going back quite a ways. A 16.7% gain year over year on the number of active listings. Number of pending, we did notice a jump. We are now at 4,307. We are lagging last year at 5.7%. That's going to give us an activity index of 19.5%, slightly better than Thursday and Friday, and a 6.32 months of inventory. And you can see the number of active listings, that big dip right there that happened. Not only did we have a changeover of the month, a lot of properties expired, were withdrawn, more so on the expired, as far as a percentage increase between June 30th and July 1st. And then, of course, we had July 4th. So all the properties that expired on June 30th, a lot of sellers decided, let me wait until after July 4th to relist the property. Let's just let it expire, relist it later on. And of course, we then had the horrific flood that pulled back inventory. That's why we saw this big, huge drop in the number of active listings. Went up just a tad. We did notice a drop last year, a drop 2 years ago, but not to this degree. But it did go up just a tad, not much. But when you look at everything that's currently in the market, almost one quarter, 23.3% of all inventory is going to be new construction, 76.7% resale. But look at what's pending. 37.1 of the pending properties are new construction, whereas 62.9 is going to be resale. So the activity index, which is the pending divided by active plus pending on the resale side of things, down to 16.59. This is a leading market indicator. This is going to put us really close to that buyer's market on the resale side of things. 27.9% activity index on new construction. Under 30. We've been over 30 for a very long time. We're under 30 now. When I was analyzing this data late last week, I had a conversation with someone that, not a team price agent, not in real estate. And this person said, wow, new construction is just killing the market, right? Just all this new construction inventory hitting the market. It's just killing the market. And you know, a saying that we have at Team Price, don't give your opinion where data proves a fact. So I went straight to the data and I was really surprised by this. Because, and I wrote an article about this, because a common misnomer that we have is that new construction is feeling the market correction. I would say it's contributing it to the market correction because properties that were built between 2020 and 2024 are competing with new construction. But I want to look at the demand for new construction. What's happening with activity? What's happening with inventory? So let me ask you a few questions because I know you didn't read the article, which is fine. Has inventory for new construction gone up or down year over year? The number of active listings on the market. Go ahead and write down over chat. Do you think the number of active listings on the market for new construction, do you think it's gone up or down? I would say a lot of people think it's gone up, right? Like, well, yeah, of course it's gone up. I mean, I see builders offering all the incentives. I see builders offering a ton of stuff. Yeah, inventory's up. Okay. I only think down because I saw the article. Okay, good stuff. I love it. Thank you, Seth. Well, the interesting thing is that the experts on X, because X is filled with experts, I just keep on reading new construction, inventory exploding. And thankfully, we have access to the data, not only today's data, but historical data. Let's take a look at the graph. This is amazing. New construction, July 3rd, 2025, active 4121, resale 13,558 on active, pending 1587 new construction, 2,656 resale, activity index this year 27.8, resale 16.3. Look at exactly the same time frame last year. New construction year over year, down 1.03%. Resale up 23.05%. The increase in inventory that we've experienced over the past year is solely concentrated within the resale market. And then you've got activity, the pending. On the new construction, it is down 13.47%. I would not have expected that. On the resale side of things, it's down only 0.6%. And then the activity index, we're noticing a bigger drop of activity index on the resale because the new construction, the active count is so much higher on the resale side compared to the new construction. So bottom line, what can we glean from this? Well, it's a I wouldn't even say, correlation or causation. It's the only product that is getting killed by new construction is the product that is directly competing. We got Georgetown, we've got areas of Round Rock, you've got Hutto, you've got Elgin, Manor. Those pockets that are specifically competing with new construction, just count me in. My Morningstar listing, my Sun City listing, where you've got immediate competition for new construction, that product's not moving. For that isolated market, it's just getting hammered by new construction, but it's isolated to those unique markets. Sunfield, there you have it. You look at other markets, especially within the Austin area, where we have less new construction, it's not being affected by that. Now, real estate's always going to be hyper-local, but I really enjoyed pulling this data. And by the way, if you ever want to pull historical data, when you go to a listing presentation, and let's just say that you tried selling the property last year, or maybe you're getting a phone call from a seller who has the property listed by another agent and the broker, or maybe it withdrew, it expired. And they're like, well, I listed my house back in March, and this is what we priced it at. Now here, I want to hire you to list my home. The reason why every Thursday I compile everything and I just create one 800-page document with all of our stats, it's not because I think anyone's going to read it. I hope they don't. That's why we want to do the daily summary with 20 pages. It's overwhelming. It's designed for us to have a historical snapshot of the market. So we can go backwards in time and take that screenshot and say, well, what was that market like a year ago, 6 months ago? You can find that information by going to teamprice.com, market update, scroll down, And there's your weekly market update. So let's just say that you're about to relist a property that was listed back in January, and that seller's talking about January's market. Well, just click on January 30th, and you've got that 800-page PDF, and you can go to the type of market city, type of market zip code. In this case, it's 775. We've added some stuff since then. But the core stats are there, and you can go, well, what was inventory like in that area? What were days on the market like in that area? And you can show that specific client, that seller, well, when you listed your property back then, median days on the market was 30. Well, now median days on the market is whatever, right? Now it's, 70. So that's why we compile everything into one document, so that we can have that historical snapshot of exactly what the market was like. You can go all the way back to 2023. We've got stats that go all the way back 20 years, but this weekly compiling everything, we have it all for the past 3 years. Let's keep on going. Take a look at a few more things. You can see the activity index at 19.5. That's going to be your leading market indicator. That's going to be the line in blue. And then you've got your months of inventory being your lagging indicator. Activity index is down 15.3% year over year. Months of inventory up 17.6% year over year. You can see that last year we peaked on the number of active listings at 15,503. This time around, we peaked June 27th, 2025 at 18,076. We are down 329 listings from the peak. Could we peak again closer to July 15th? We could. It's only 329 listings. The storm that happened over the weekend will certainly put a unknown into that. Had the storm not happened, I'd say that we would have been a lot closer to having our 2025 peak. It's going to be interesting to see how many people put their homes on the market, what's happening with cleanup, what's happening with seller sentiment. Well, we track this information daily, and we will know by Friday, Monday on whether or not we have a new peak for the number of active listings currently in the market. Now, out of all the active listings, 56.9% of those listings have had at least one price drop. On the pending side of things, 51.7% of pendings have had at least one price drop prior to it going under contract. On new construction, 53.4% of new construction properties have had at least one price drop. On the activity index side of things, let's take a look at this one. The slowest city in the entire area is going to be Smithville at a pitiful 5.8% activity index. Basically, there is no activity. Followed by Spicewood at 7.7, Lago Vista at 10.2. On the opposite side of things, Buda, Hutto doing extremely well at 31.5 and 31.4% activity index, primarily fueled by new construction. Do keep that in mind. But we can see the activity index in months of inventory. We are right there at that 20, heading towards a cooler market. And as you know, because the activity index is a leading market indicator, as we move down this way, we move up this way. If you were to look at the historical dot chart on the activity index of months of inventory for 2 years ago, all of those were here. We had a few ones right here. But as the market gets cooler, months of inventory starts going up. You've got the leading market indicator driving the lagging market indicator. On the zip code side of things, let's take a look at some graphs. You've got the number one zip code, 78610, Buda, Hutto. You've got Gerald doing very well, Kyle doing very well. On the Austin side of things, you've got 4439, Elgin also doing very well. On the bottom side of things, of course, you've got Smithville, you've got Spicewood. The least performing zip code in the Austin area is going to be the downtown 78701. The second one is going to be the Lakeway area, 78734. And then you've got 46 Westlake area, 0521, all around the 10% activity index. And that's really going to put you at that buyer's market. Very, very little demand in relation to the number of active properties. So how many markets are on a seller's market versus neutral versus buyers? We've got 11, 11, 8. 11 sellers, that's going to be 37%. 11 neutral, that's going to be 37%. And 27% or 8 cities are in a buyer's market. When you take a look at zip code, we have 51%. It is amazing that even though we keep on talking about the activity index and this is what's happening, and we've got a lower demand, increased inventory, record high, we have to keep in mind the hyper-local nature of real estate. And we still have a vast majority of zip codes are still in a seller's market at 38 out of 75. 51% of zip codes in a seller's market, 20 zip codes, 27% in a neutral market, and 17 or 23 in a buyer's market. So let's take a look at the zip codes that are in the cusp of transitioning. We don't have many that are transitioning into a buyer's market. It takes a lot of new listings to go from 6.73 up to the 7 or so. You might not think it does, but especially going into a season where new listings start backtracking, if we did reach the peak inventory and we're now entering the seasonality of real estate, new listings are going to start dropping. People are going to wait until next year to list. And then we're going to have a little bit of an increase in pending transactions. That's going to draw down months of inventory because you need active listings for months of inventory. I do not foresee these transitioning to a buyer's market. We're going to hold steady. Now, from the neutral market to a buyer's market, we've got some that are close and they could go both ways. A 3.6 could very well transition back into a buyer's market, go under 5 months. Same thing with Georgetown, 5.6, 2.7. These are already in a buyer's market territory. It could go either way on some of these that are really, really close. Are they going to transition to a neutral market if we see a little bit of an increase in inventory, lack of demand? So we'll keep track of all of this information. What about months of inventory? What's going on year to date and year over year? Number one city with the highest increase year over year in inventory is going to be Jarrell at 75.2% increase in inventory year over year. The city with the largest decrease is going to be Wimberley with a 21.1% drop in inventory. Austin is at 7.8%. On the year to date, we've got Marble Falls at a 120.7% increase in months of inventory year to date. And then on the opposite side of it, we've got Hutto at a 38.6% drop in months of inventory. Zip code wise, 78739 was the number one zip code for a very long time. It's hard to believe that January 2025, we had 0.96 months of inventory. Now we're sitting at 3.64, still very low, but a 278.1% year-to-date increase on months of inventory. And on year over year, you've got 78725, Austin at 108.7. So what do you think is happening with pricing, you all? What do you think is happening with pricing? Do you think pricing's going up? Do you think pricing's going down? What do you think is happening with pricing so far? I did update the charts for the month of July. Okay, let's take a look at that. Barely up on the average, surprisingly down on the median. And that's a little bit concerning because we are really early into the month. So as soon as we see this dramatic drop on the median month over month, the first thing we're going to do is take a look at the percentile analysis. We're going to take a look at the high versus low home price trend. Year over year, we've got a drop of 15.5% on the number of sold properties. We take the exact 30-day snapshot. Right now, we compare it to exactly the same 30-day snapshot a year ago, and we're noticing a 15.5% drop. It was 32.33 2024, 27.32 2025. On the bottom 25th percentile, you take the bottom 25th, the price, not the median price, because that would be the 50th percentile, but the price for the bottom 25th percentile is at 325, meaning 25% of those sold properties were priced under 325. Last year, it was 344. So that's a 5.5% drop in price on the bottom 25th percentile. On the price per foot, that's a 4.6% drop on the price per foot. The top 25th percentile, we're now noticing a drop both on price and on price per foot. You know this because you've been joining us, that when we see both the bottom and the top 25th percentile go red, what do we notice on the market cycle? That goes red. Even when activity is down, if the top 25th percentile is up by 2-3%, historically, what's going to happen with the average and median sold price across the entire region? It's going to go up, even though we've got a lot of pressure on pricing or inventory, lack of activity. This time around, we are up by only $59 on the average sold price. That's going to be month over month. Year over year, we are up 15,710. On the median side of things, we are down $2,500 month over month, down $2,500 year over year. Another interesting thing that we noticed is going to be your sold to list price ratio. We are currently, so far in July, really early in July, the data could go either way. We're at 97.2% sold to list price ratio. That does match February of 2025 at 97.2. But if we only compare the month of July, we have to go all the way back to 2011 to get a lower sold to list price ratio. So that sold to list price ratio is going down. Another resource that you can sit down with your sellers and show them the information. There you have it. Sellers are not getting as much in relation to the list price. So this is a great resource just to sit down with your sellers and have that conversation with your sellers on exactly what is going on. So that's going to be our recap on what's happening with the entire market, what's happening with the market cycle, what's happening with pricing around the entire Austin area. Let's take a look at what can we expect this week when it comes to the economic calendar. It ought to be there's really not much going on this week. We've got 2 bond auctions that just happened. Let me see if I can get a refresh here to see if we've got the results of the 3 and the 6 month bond auction. Not quite. We've got some commodity data coming out. Let's take a look at the entire week. It should be a fairly calm week when you look at the economic indicators for this week. We've got small business optimism. Okay, that's good. Consumer credit. It's not going to affect the market that much. We've got mortgage applications that always comes out on Wednesday. I do expect that to be on the positive side week over week, simply because we did notice an improvement in rate. As a matter of fact, if you take a look at Robert's rate sheet from this morning, let me open it up right here. He just got done sending this to me not too long ago at 10:12 a.m. And it is opening up right here next to me. As soon as it opens up, I'll take a look at it and I'll share it with you. But rates have trended down. They ought to be, okay, so at 6.75, so they were at 6.625. If you look at the bond market behind me, it is up 4.4 basis points today. So that contributed to the slight increase from 6.625 to 6.75. But this mortgage application is the reading from the previous week. So I do expect that to go up because last week rates were a little bit lower. We've got some job information, and then we've got some just additional, oil rigs, how many oil rigs. So not the most consequential week when you look at the economic calendar, more so next week. Next week is going to be all about inflation. What is going on with CPI, Consumer Price Index, right there on Tuesday. Then you've got PPI on Wednesday. You've got retail sales, export pricing, National Association of Home Builder, Housing Market Index. This is where we're going to get our home buyer walkthrough traffic. We've got housing starts, housing permits. Huge week next week for the bond market. It's going to be a winner take all or loser loses it all next week when you look at the bond market. So stay tuned. We go over this information, of course, every single week so that we can educate our clients and so that we can ourselves be educated on the market. The last thing that I want to share with you is I know that we are all extremely busy and we've got a lot going on, which is why underneath every article, you can now listen to the article. You can watch the article. You can listen to the article on Spotify. So we've done a really exciting job converting these resources to a Spotify podcast. Go and subscribe to the Team Price Real Estate. We're calling it the Deep Dive, helping you navigate Austin real estate. Subscribe. You can listen to it. You can watch it on YouTube, whatever is best for you. We're getting really good feedback on this. So I know a lot of people are super busy. They'd rather just take the 12 minutes, listen to what's happening to the market as opposed to just trying to read and digest all of this information. So that is something that we're doing. People have loved it. We've gotten really good feedback on just having this as an audio source. And take a listen. It sounds amazing. It's super professional. So I'm really excited. And you can just go to any article and you can just not only watch it, you can subscribe to our Team Price YouTube channel and also our Spotify and just listen to it. It looks great. This one is only 10 minutes. And we're publishing articles that are going to be really actionable for you and for your clients. One of them is, should you sell your Austin home now or wait until 2026? So we just digest the data, take a look at it. Hey, what are some of the challenges that sellers are facing? What are some of the opportunities for sellers? So take a look at this. And once again, we do have it as a podcast, not only on YouTube, but also on Spotify if you want to listen to it as opposed to actually reading it. Any questions, you all? It is 10:53 in the morning, so we really did a really fast recap right here. Any questions? Any questions, comments, concerns, criticisms, or complaints? Any questions? Yes, Violet, go for it.
Just curious what people are finding relative to open house traffic.
That is a very good question. I would say this. Open house traffic, it's very spotty right now. Very spotty. And let's just not even count this weekend. What we're noticing in the overall market is that one area that is very hot for open house, you do an open house in a specific zip code. And for the longest time, it was the Cedar Park, Brushy Creek area was doing very well with open house. All of a sudden, it just stops. So agents cannot be really attached to like a specific area unless you are farming that area, you've got listings in that area, and you really just want to make your presence known for that specific area, then great. Then stick around there in that area, get that name recognition, use the branded sign. But we are noticing a hot pocket come up where you've got a high activity index, good demand, and all of a sudden, within a matter of 2 weeks, it just absolutely just dies. And it's like, what just happened? I've been here for 2 weeks and it's been great. And all of a sudden, there's no one. We have to be very flexible using the data, using the activity index. We have an activity index per price range, per square footage range and go for the product that people are actually looking for, the ones that have a higher activity index. Stacy said, for what it's worth, I had 4 parties come through at an open house in Preserve at Stone Oak this past Saturday. That's fantastic. And I would even say 4 is not a bad number, not a bad number at all, especially on Sunday with the way that the weather was. That is an excellent number. But, stay flexible, rely on the data. Pick what people are picking. That's going to be the most important thing. Don't be so attached to an area that if all of a sudden that specific area has a huge drop in demand, you're not getting traffic, not worth doing it. Go after the areas where you are noticing traffic, you're noticing activity, where you've got high visibility, you can put a lot of signs. That's going to be my advice on that. Good question. Any other questions, you all? 10:56. Any other questions? Any other questions, comments, concerns, criticisms, complaints? Going once. Going twice. All right, good stuff, you all. Well, it is 10:56. Thank you all so very much for joining our Monday morning touch point. I'm going to email you all this information along with the summary of today's meeting. Keep in mind that we are having our Wednesday meeting, broker Q&A, contract review over Zoom, and we are having a Friday meeting at the Austin Board of Realtors. It's going to be Friday. So this week, same normal week. I'm in town. Everyone's in town. So please join us Wednesday over Zoom. You're going to get 1,000 reminders. And Friday at the Austin Board of Realtors. Thank you all so much for joining. Super appreciate it. Have an amazing, excellent rest of your Monday. If you do have any questions, please feel free to reach out and I will chat with you soon.